Okay, thank you very much to our dry bulk panel. It all sounds very positive. Very happy about that. And we'll hopefully, when we're here again next year, we'll be hearing something similar. We now have the honor of inviting to the podium Mrs. Angeliki Frangou. Angeliki is known to all of us, of course. She comes from a shipping family, ran her own private company, went through the whole Navios experience, and is now principally founder, chairwoman, and CEO of Navios Maritime Partners. And interviewing Angeliki, we have Mr. Omar Nokta, Managing Director, Head of U.S. Securities Clarksons Platou, who's come over from the U.S. Thanks, Omar, for coming all this way across. And over to you. Thank you.
Kevin, Mia, thank you for inviting me here to Marine Money Conference, and Angeliki, very happy to be sharing the stage with you today. I'm going to ask a few questions to Angeliki to discuss some of the latest developments. But first, I wanted to mention, a long time ago, back in 2004, I was in my mid-20s, young analyst, and my former boss, Simon Rose, came to me and said, "There's a new company called International Shipping Enterprises. Look into it, tell me everything I need to know." So after 10 minutes, I went back and I said, "There's nothing, there's no ships." He said, "I know there's no ships, it's a SPAC." I said, "SPAC? What's that?" "A blank check company." I don't know what that means. He said, "Forget it. Tell me everything there is to know about Angeliki Frangou." And I said, "Oh," and that was my first lesson, that shipping companies aren't just a collection of ships. There's a management team behind it that drives the ball forward. And so shortly thereafter, you acquired Navios. You expanded that company further into capes. You got into tankers, and you got into containers, bank portfolios, logistics, and you've had a series of public companies. You're viewed by many in the industry as extremely business savvy, smart. People inside of Navios have told me that you're just on a different level of thinking and strategic mindset. Investors believe that. Even bondholders and bond investors have told me you're the smartest person in the room. So that means something coming from a bondholder. So it's interesting, the latest strategic shift that you've undergone here recently, and it definitely turned a few heads. So maybe could you just give us a perspective of what you've done recently with Navios?
Good morning, Omar, and thank you for coming from the United States. Thank you for the compliments, and I'll reciprocate. I'll say you look younger than 20 years ago and better. One thing, as you know, we just completed on Friday the merger between, and it's the new NMM, the merger between NMM and NNA. Basically, what we did is we created the largest US-listed company, 6 globally, over 140 vessels, 3 segments, dry bulk, container, tankers. About a third of our fleet is in each segment. 15 types of vessels, over 10 end markets we are servicing, and we have about a portfolio of assets that are about 20% below industry average. And this is about, we created a platform of $4.5 billion in assets. It is basically the strength of the scale, number one, and the resilience and diversification. And what we are trying to achieve is mitigating single segment volatility while we're leveraging the fundamentals of the different sectors. And this is actually learning from the past, basically.
I was going to ask, what brought you to this point? Because you have lots of experience in the public markets. Is it the lack of diversification across different companies that pushed you into this direction?
It's basically the advantages you have as a management. So mitigating single sector volatility and leveraging this, what you basically have by having this diversified platform, you have number one, better cash flow, better chartering strategy. And what do I mean by that? If you see on NMM, we have about $1.6 billion in contracted revenue. But this basically revenue comes from the container sector, from the strength of the container sector. We have multi-year contracts on our container vessels that not only provide this visible cash flow, but more importantly, they create a low break-even for our overall fleet, for all our vessels. We have a break-even, and we will announce it on our results. That is basically what is OPEX for other companies. So that gives you flexibility to optimize your earnings. That's the number one advantage. Number two, that creates flexibility on your balance sheet. And number three, better acquisition strategy. And a good example on this is what we did with, if you are in a single sector, you have to only invest in one sector. If you see the opportunistic acquisition we just did with NNA, is an example of what is the benefit. We bought quality tankers, a well-known fleet of 45 tankers, nice vessels, still value that you, in a block deal on the low part of the cycle. So basically, you bought NNA at NAV on the low part of the cycle because it's tankers, and you use as a currency the NAV of NMM, which included dry bulk and container vessels. The container sector has seen a value expansion of over 3.5 times from the beginning of the year and much more from last year. So we used a strong currency, a benefit, and for our investors, we got a good entry point in the cycle for the tankers, and also a further advantage is the value expansion that we will have as the tanker sector recovers. So this is the basic advantages from this.
Yeah, so tremendous advantages in terms of deploying capital and when to deploy it. How about on a commercial basis and how you deploy the fleet, revenue-wise, whether it's spot market, time charter? What kind of flexibility do you get with that?
This is what I was describing on the chartering strategy. The advantage is basically by having, let's say, contracted revenue from the container segment. You can have spot market exposure, totally spot on the tanker, which is in a weak position. So you optimize your earnings. Otherwise, you will be very restricted. I mean, you will have to see, maybe you will do a little bit longer charters with the tanker segment, which will be in the wrong time. So the optimization of your portfolio is the best thing that you basically have with this.
Yeah. And one of the bigger topics, and this was at Capital Link last week, was being discussed. Some people have called you now at Navios a conglomerate, and that the conglomerate approach perhaps requires a discount valuation because historically conglomerates are hard to monetize. Are we using the right term when we think of conglomerate to describe Navios Maritime?
Omar, I will say one thing. I'm not a native English speaker, but the definition, we have some of here, but the definition for a conglomerate is not what I will describe NMM. A conglomerate is a collection of unrelated businesses. And you basically trade at a discount because they are so unrelated that nobody really can actually put a value on each segment. NMM is a blue water transportation, maritime transportation company. Basically, the same skill sets apply for all your businesses. For all the same skill sets we have for all your employees that you use for all the segments, and basically the same dynamics are driving the sectors, and the same analysts are covering. So I will not see I will not call it conglomerate. I will say blue water maritime transportation with the advantages of really getting even returns while you have uneven performance on the different segments.
Yeah, so more of I guess you could say, conventional shipping company, and perhaps maybe a template for the future.
Yeah, somebody else said that this is only for private sector and not for public. I'll say that the moment you use that this is a successful business model for private companies, you concede the point that is also good for the public companies.
Yeah, yeah. Well, there's definitely been in the public markets, in my experience, a real drive on the part of hedge fund investors to really drive for pure play single asset companies, where you generate whatever you generate, but you give it to me as an investor. I want dividends, dividends, dividends. How do you think about that going forward?
You know, we have been a long time watching this market, and I'll say we have seen the live and die by the sector. Yeah. You know, you have, and this is basically a challenge business model, I'll say. Why you create excess cash flows and you dividend out on the good times, where you create you create a real residual value risk on the low part of the cycle, because you have really over leverage. Like, take for example, I was listening to these panels, virtual panels, over last week, and you have a single sector company having a 50% finance on the top of the market. What will happen, and we have seen it, is that as you come to the low part of the cycle, you will be over leveraged. So the 50% will become over 100%. So now you have an over leveraged company, anemic cash flows, and then an overstretched balance sheet. So instead of being able on that part of the cycle to really do acquisition and grow your fleet and grow your company and replace the assets, what you will be is you will be devastated, or you will have to sell assets at that point and solidify the losses because you have no alternative. So the model of during the single sector is good time, party time during the good times, and then devastation, destruction on the low part. I think we need a model, and we need companies that can be through the cycles.
Well, definitely, I guess you could say the industry has evolved, at least in the public markets, because back in the early 2000s, there weren't that many dry bulk companies, and they all came public, but they needed something to entice investors to participate. And so that, what I think, brought about the high payout model came about as a result of that. But it's been, 10, 12 years since the financial crisis. And it's proven, at least thus far, that living and dying by the cycle and living and dying by wanting to pay dividends is not a recipe to attract a long-term investor base.
Repeating the same thing and waiting to have a different result is the definition of stupidity. So in one way, I'll say that what we really need to do is we need to create a platform. I mean, shipping is a viable business, and creating a sustainable, diverse platform is a proxy for global trade, the global economy. And in a world where we care about inflation, let's not forget that this is a good hedge for inflation also. So I think we need to move forward on the next page of that. Yeah,
and the sustainability with the diversification that you have. You talked a bit about leverage. Where do you see the appropriate amount of debt as a percentage of the company going forward?
Listen, we just did the acquisition of $1 billion in tankers, and we are about 35% leveraged, and we see this going down. We like to be, below 30%. As the markets recover, we will see more deleveraging, and this is something that you want to do in the bull market, because that will allow you to have a flexible balance sheet and a flexibility when the markets are not so boomy. So this is the reality. You need to have a low leverage, and deleverage in the bull markets to give you the flexibility for being an all-weather model.
Yeah, and can you envision going back up to 50, 60%, all else equal?
Listen, you will be over-leveraged when you are in the low part of you will be 50, 60% on the low part of the cycle. I was looking at these graphs before. If you see values appreciating, values will go down. I don't know when, but they will. Yeah. I don't know why, but it will happen.
So in terms of deploying capital, you have the flexibility, and you have the three-pronged approach with the dry bulk containers and tankers. Each of those is experiencing different fundamental backdrops. and some have exciting futures, some have questionable ones. How do you think about deploying capital now at NMM across those three?
Listen, today we just completed this acquisition, so we need to see how the tanker sector will play. I will say definitely from the number of people that travel to come to this conference, being the first actual conference, physical conference, I think tanker sector will do well, but we have to wait. So basically, we see that in the portfolio we have about 85% of the global trade we represent the sectors we're in. But after we see the tanker sector, we will be there to review. We are there to review every sector, and we will see relative values, how we enter. That is our job, after all.
Yeah. So right now, the merger just closed on Friday, and so of course it's not a normal merger. It's just turnkey, or you change spreadsheets. 85% of the cargoes are represented with your company now. There's still the other 15%. I know there's a lot that you guys have already accomplished in less than a year, but how do you think about expansion beyond the existing footprint going forward?
It's relative to the balance sheet. I mean, we will do it on the appropriate time, and we'll see relative entry points. I think in that is, if anything you know about us is about residual value risk, entry points. I mean, we just completed NNA, the tanker sector, and early in the year we completed the Navios, then MCI, the container. That was a transaction that was a catalyst. We saw our share price in the last 12 months grow over 400%. We provided this nice return to our shareholders, and the recent transaction that we completed, we announced in August, has seen our share price grow another 30%.
Yeah. So I guess the one thing maybe we didn't really discuss too much is you've got the diversification, but you've also got the scale. You have the large scale, which really over the past many years, investors have increasingly talked about that as one of the most important drivers for wanting to make an investment. Is they want scale. They want to see a company that has a sizable fleet so that they can capture the market. And I'm asking a similar question to what we just talked about, but when it comes to, say, the next transaction, if you were to expand beyond your existing footprint, would you see yourself doing it on a small scale to get your feet wet, start slow, or on a large scale?
It is always relative to what the transaction and the risk and the residual value. But there is definitely sectors that we will enter. I mean, you have seen us how we performed previously, how we entered in the container sector, a portfolio of 10 vessels, and we ended up with over 40 vessels portfolio. So it is a matter of how we transact. We will enter, review, but we need to see how the tanker sector plays, and in the right time, with the balance sheet we have, we should review the next board.
And I guess in terms of deploying the fleet, you've tended historically to be a bit more, you have your time charters, and then you have index charters when it comes to having exposure to the spot market. But commercially operating on the spot market, specifically within Navios, has been somewhat limited, at least from the outside looking in. Do you see, with a bigger company,
we operate in every market.
Yeah.
Basically, the index vessel today is the best, in the dry bulk, is the best thing you can ever have, because you can actually reprice every day. Let's say take a Cape-size vessel. If you do spot chartering, which we have a very strong team, it will provide you 4 trips a year. So you have 4 points. The difference on this kind of a market is that you actually can get every day the exposure on the spot market. If you're in the wrong time, you're locked in, let's say, at 30,000. Not that it's bad, but today you got a month and a half with over 70. This is the advantages of the index.
Yeah.
So we are very open-minded, but we care about maximizing our revenue.
Okay, yeah, the index charters definitely seem to be the best. Plus you get full utilization, right? That's the other
Yes,
aspect.
and also we have the additional thing whenever we see the forward market being priced, what we say, more healthy than the spot, we can actually fix them a quarter, a year. So it is a matter, and we don't use one formula. We use multiple formulas.
Yeah.
We just make sure that we maximize the return for the company.
Very good.
Omar, 5 minutes. Yeah.
Okay, yep. Okay, we talked earlier, the previous two panels, there was a lot of discussion on new buildings and regulation. Maybe just, if you could spend a couple minutes just talking about how Navios approaches the green transition here.
You need to be very on top of the situation. The long haul solution on green has not, the right fuel has not been found. I mean, for the short haul EV, we have seen there is a solution. So for the long haul, which is shipping transportation, we are still we need to really review the different technologies and what will be the end result. One thing that we know is for the next years, you have to assess your portfolio, your vessels, and we also we have to make sure you improve your emissions ahead of the deadlines. And in that, we are very careful. There will be a capital expenditure every year to improve that, as well as you need to have good quality vessels of different, Japanese CPRs or very advanced technology, so that you will bridge the point that we are today until the point where you will have a new fuel and really the next day. We are not yet in the next day. So you need to bridge that period. You need to do incremental capex and to be ahead in the curve. I think that is the most important issue.
Thanks, Angeliki. I'm going to try to fit in two questions, different types of questions, but maybe simply put, the first one, where do you see the Navios group here in 10 years from now? We're looking at 2030, 2031.
Having 100% of the global trade. So we care about to be a proxy, a diversified proxy for the global trade, global economy, and a sustainable one. That is our goal.
Very good. Looking forward to seeing that. And then finally, with all of your public market experience, what advice do you give young Angeliki Frangou, early 2000s, coming to the public markets?
Omar, I was a little bit afraid that you will ask that question. I think the white hair is obviously brings you to that. So I'll say that we need to have economic rationale. Whatever you will do with your own money, you should think and do and be more careful with public money.
Very good. All right. Well,
Thank
you.
you.